Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here with a Forex Trading for Beginners webinar for you. Before we get into it, we just want to remind you that this webinar is for illustrative and educational purposes only. Also, if you have not done so, please subscribe to our YouTube channel, Forex Trading Unlocked, and our Twitch channel also, Forex Trading Unlocked. And when you also get a chance, go to Amazon.com and check out the book High Probable Japanese Candlestick Patterns, written by yours truly, Teddy Keckstedt. It's available in paperback and Kindle versions. All right, so let's get into the meat and potatoes of Forex trading for beginning. So one of the best places to start is at forex-trading-unlock.com. That is our company website. This is our home page. On the home page, we always have, when we're streaming live, we have, which right now we are, you can see what is going on as it is occurring. Then we also post our weekly analysis also, so you can just go to our home page and get that information right away. As a little breakdown about us, if you haven't already downloaded the NinjaTrader platform, I highly suggest that you use this. You can access it from any one of our pages. We have a NinjaTrader download tab. Also, from our tools, you can, from the navigation bar, click on the NinjaTrader platform or the multi-charts trading software platform. Great platforms to check out and use. NinjaTrader is free for all basic users for end-of-day data, and you can use it for Forex, futures, stocks, you name it. So, but for us, we prefer that you check out the Forex Trading Unlocked nav bar and go to the workstation page, because we have everything set up very convenient for you. From this page, you can start your day where you can check out our live streaming analysis. You can also then step and look at the calendar. You always want to be aware as a beginner, especially, what is going on in the world as far as news events. The nice thing about our calendar is it's arranged on a daily basis and goes by the different countries. So you can see, like for instance here for the euro, you have the COVID-19 numbers. Then you have for Japan, you have large-scale retail sales yet coming out today. For New Zealand, you have this, and then you also have on the 31st consumer confidence, blah blah blah. You can see how that goes. These are all brought to you by TradingView that we have access to on our website. The nice thing about using forex-trading-unlock.com is that you can see, as we're doing this live, there's not all kinds of pop-ups. You don't have all kinds of marketing ads and things like that that you would if you were to go to some of even these other sites like TradingView or what have you. So we try and keep it limited so that you can access this stuff from whether it be a cell phone or a tablet anywhere in the world, and you don't have to worry about logging into an account, and you can check analysis and get your news and actually do some functional things as well. So when you come down to this page, as you can see, we have it set up with the euro as our initial market. You can always change these at any time. Like here, we'll put in the US dollar JPY. As you can see, it then changes it, and it gives you all these other bits of information. We're going to go over that in just a second. So also you can pull up things like XAU USD, the gold. This is all live in action. The only thing that is delayed would be something, for instance, like CL1. Let's say you wanted to look at crude oil. Futures contracts are in delay. You can see that it says May 27th. So by law, you cannot have live futures data unless you're paying for it. So you can't broadcast live futures data. It has to be in delay. So that's the one thing that will be in delay on our website, but it is all free for everyone to use. And you can see how, even from when you pull up these different markets, it gives you the curves, it gives you performance and how it's done on a weekly, yearly basis. It has other technicals as far as whether it's in buy, neutral, and stuff like that. So these are all very useful tools that you can use. All right, whoops, put the wrong symbol on. Euro, US dollar. Okay, so once again, we get back to here, and you can see on a Forex basis that it gives you the current market quotes. So this is all live in action. Gives you some basic numbers, some performance numbers, and also some technicals. You can click on more technicals, and this will give you it on a different breakdowns of, say, the monthly basis or the weekly basis. You can see how it changes, 15-minute, 1 minute, you know. So there's all kinds of ways that you can get information like that readily at your fingertips. For time frames, for the charts, you can use access to right here. You can go on the hourly right here really quickly. You can go to the 30-minute, gives you different time frames, really quick accessibility. You can see that as the euro was trading lower into today's session, once the U.S. markets opened, it did like a balloon underwater. It bounced everything right back. A lot of this could be because we're in front of a holiday market. It could be a lot of profit taking going on in the U.S. Right now, currently, all the other markets are closed globally. So now let's go to the daily right here, and you can see that the euro US dollar, which had probed new lows on the day, has had a nice bounce. The question is will this rally continue? I believe that at least going into the holiday market that you're probably going to see this trend continue going on into Tuesday, Wednesday morning. So remember that there is, markets are closed in the U.S. We click on this, make this a little bit bigger. You can see how easy it is to manipulate these charts. Like I said, as we're looking forward to do our analysis into the week to come, we're looking for this to make a higher move high off of this low. So why does he say that? Well, let's start with the very beginning thing that all Forex trading traders need to know, especially in the beginning, is you start with trend analysis. So as you can see here, the market bottomed out here in April. Just to make this a little clearer, we're going to go like this, and go like this. All right, so this right here is where the market bottomed. See this little circle right here? So this set this major low right here. Going into that point, the market had been trending lower, as you can obviously see, and then once it hit this point, it started to rally. Now, of course, in the initial beginning stages of this, you don't know if the market is bullish or bearish on the short run, because the market's going up. That is bullish, obviously. Bulls go up, bears go down. So what you do see, though, is once a few sessions occurred, you keep on making higher move highs. Every little pullback becomes a higher move low, and then we continue to make higher move highs, come back down a little bit, make a higher move low, and then boom, we come. And the trend is that higher move highs and higher move lows. It gets a little clearer as we get closer into these areas here. So for here, we have a high, and then see how we can mark with the text really easily. We have a low, and as you can see with those highlights now, it should stick out to you where these are highs and lows in the marketplace. Now when you have higher move highs and higher move lows, that is a uptrend. Now if it was the opposite, where you were making lower move highs and lower move lows, like for instance here where we had a high, we had a low, lower move high, lower move low, lower move high, lower move low. That is a downtrend. This is an uptrend. So that's one of the key things for basic analysis for Forex traders that you want to key off of, is establishing your trend. If you know what the trend is, then you can look for trades. There are counter trend trades and there are trend trades. Typically, especially for beginners, you want to focus on trend trades. To trade counter trend trades takes much more experience. They have a lower probability of success. So how you manage your risk in counter trend trades and trend trades is different. These are things that you learn as you expand your knowledge. Right now, this is all about for beginners. What do you have to focus on and look at? Basic fundamentals. Once you have these things down and you incorporate that into your discipline, which is your outlook for markets, and whichever markets you approach, every time you approach them, you need to do these things. If you skip over these steps, you are already setting yourself up for failure. So the very first thing for Forex traders, for beginning Forex traders, is to remember to acknowledge what the trend is. Now, this is a daily chart, so daily charts have a little less noise than, for instance, if you go down to, say, the hourly. See, the hourly all of a sudden is broken down. It's in much tighter ranges. There's a lot more noise going on. There's news events that come out. There's things that happen during the day that cause all kinds of gyrations where the market, for instance, here sells off real quick, but then it buys itself back up and comes back up here and starts to chop around. Then we get to a point here where in front of, like, say, the U.S. market opening, the market totally tanks. U.S. market opens, reverses gears in a big way. Does that mean that every time a market opens, that's what happens? Absolutely not. However, today the news was what it was. The whole world is settling down into the end of the week as the U.S. Is the anchor man for the Friday trade. So, and that's probably what's going on right here, is that you have a Friday rally going on because the other markets are closed. Now, if you go down to the 30-minute, you can even see even more gyrations. You know, it gets tighter and tighter and tighter. There's a lot more going on. 15-minute chart, look at this. This looks like there's a lot of activity. What you have to take into account, though, is look at the range. Like, for instance, these trading bars here, like if we look at this one right here, let me put the arrow so you can tell which one I'm talking about. Look at this green bar here. The low of that day, or of that bar, is $1.2166. You can see the low is this number right here, L. I have this bar highlighted. The low is $1.2166. The high is $1.2187. So that's only a 26 pip range. That's not a lot of market action. When you take a look at the daily basis, those bars are much more significant. So like today, the low is $1.2132 and the high is $1.2201. That's a 73 tick, or excuse me, a 67 tick range. So that's where you have to look at the differences. The scalability of the time frame has a lot to do with what's going on with these markets. So always be aware of your time frame and be aware of your trend as a beginning Forex trader. So these are the first dynamics that you want to learn, and then once you start to get those in a grip on those things, that's when you start to incorporate signals. Trading signals is a totally different thing to work with. The first thing you need to understand is market direction, what's going on. So, trend dynamics, usually the best way to start is to identify a major swing low or a major swing high, and then identify the highs and lows and figure out whether or not they are consistently making higher move highs and higher move lows, or if they're making lower move highs and lower move lows. Another thing to do once you have established that is when you find your lows, for instance here, you can connect them and you find the support. Now today is a good indication of where the market opened up. It was riding this upward sloping support and boom, it tanked, came all the way down and then shot back up, and now it's positive on the day. So does that mean that support has failed? Not necessarily. There was a big extreme test of support and the market snapped back. However, it does show that the market was trying to establish what? A higher move low. After all, here is a high. Okay, so here was our higher move low here, and then here we have our higher move high up here. And now we're looking for the next higher move low, and that's when you start to figure out, is it going to be a new buy signal, or is it just the a place where the market starts to establish a intermediate churning trade. Remember that markets do digest. They don't just go from a low and then start making highs. They sometimes start to settle into a sideways pattern. So you never know about that, when that is going to occur. There are indicators you can use that sometimes help. Remember now, when it comes to indicators, there are so many different types of indicators. You can go indicator nuts. As a beginning Forex trader, I would suggest that if you're going to use indicators, you stick with something very basic. One of them would be a stochastic. Okay, so the stochastic here is an overbought, oversold indicator. As you can see here, when it's in this lower range here, that's when it starts to come into a buying zone. Now, when it gets into the upper part here, that's when you're looking for a selling indicator. Now, the thing about these is about indicators themselves is a lot of them are lagging, meaning that the market will turn beforehand. As you can see here, the market had been trending lower for a while. Like if you look at here, it started, this indicator was already trending in the oversold territory. Everything down here is oversold, everything to the top is overbought. So had you started to look to buy when this indicator started to be in the oversold territory, you would have bought into this area, and then you would have been losing money. Okay, so you have to be mindful of indicators. They're very lagging. They do help. Usually what you want is you want to have more than one indicator lining up to give you an idea of what is going on. So if you do that, then that changes the whole dichotomy of what's going on with your analysis then, because then you can start to use it where it becomes very functional. Okay, and that's one of the key things that you want to do when it comes to your analysis. So first we identified the low, then we identified the higher move highs and higher move lows, confirming that we have a bull trend. Now as you can see is that since we knew we were in a bull trend, your indicator here tried to have a little sell signal. When these lines cross, that's when they start to indicate that the market is selling off. Now if you would have used this first cross over here, just like if you would have used this first buy over here, you would have been losing money. So the key is, when do you know that this is not going to really be this and actually sell off, or when this is this, when it does sell off? Well, there's lots of different ways to figure that out. Now just like here, as we're making this higher move high here that we had just made recently, you can see now we sold off for the last couple of days. It's starting to grind here, and it looks like, oh, the indicator is looking like the market wants to sell off. Could be, maybe not. Remember that since we're in a bull market, we've been making higher move lows. So as the market sells off, it doesn't sell off very much before it returns to the trend. And that's why you got to remember when you're, like for instance in this case, where we're in an uptrend and we're using an indicator, when it starts to say it's overbought and it's ready to sell off, remember that's a counter trend trade. Now for instance here, where we knew the trend was up, and here we had this crossover right here, see where this low is here, and this cross and started to go back to overbought, that was a fairly decent buy signal because you're in a trend trade. This cross goes in the direction of the trend. And then as you can see, the market made another rally and exploded to the upside. So it'll be interesting to see if you can, if you're catching on here as we add this next indicator and see where we're going with this one. So now one of the keys to knowing the market direction, like I said, is using these indicators. Now let's use a combination here. So we're going to pull up another really popular indicator, the relative strength index. So now we have the stochastic, which is the first indicator here, and then we have the relative strength index. Now notice this one. You have your oversold indicator layers down here near the bottom, and you have your overbought indicators here towards the top. Now see how when we had this low here, this crossed here, this was on the bottom, they both kind of worked together, and then here they did the same. Okay, now this one doesn't have any crossovers, but when you line these up together, they do give you some short-term buy points. Now this one did work for a couple of sessions, it just didn't hold out for a very long time. So initial corrections, and that was also, think about this was a bear trend. So when you had this crossover, it only lasted for a couple sessions. That's a corrective move. It was a counter trend. So counter trend moves don't give you these big long crossovers here for these indicators. So in a bear market, you would expect the initial crosses usually to be a corrective trade. Should they be that, that's when they become this stuff here, and then you know that it was only that. When they start to go like this, then you know that it is more than a corrective trade. Like this is where there was a trend reversal. Okay, so with this one, you can see this was in the oversold territory, this was in the oversold territory, and then we get this big rally here with this. Now as you can see here, see where this crossed here? This was already in the overbought territory in a big way, and then the lines crossed for a sell. Well, this trend kept on continuing higher. But look at the relative strength. If you notice this one, yeah, it was heading towards oversold, overbought, but it hadn't turned yet. This one was turning, and this one was stabilizing. this one here, when it went sideways, it did start to move down a little bit, but it didn't matter because the trend itself had been going higher and higher every day. So that's when you know it's most likely digesting, or the momentum is so strong that these indicators are always lagging, that the numbers start to skew in the overbought or oversold area. That's why you need to incorporate other techniques to know when you do your initial entry for buys and sells. So now here, this one here is another one where it crosses. This starts to get in the middle. It gets really tough to read these indicators. So these are things when the market is trending on major extremes. You can use these to help give you an idea of when the market turns. But remember that there's a lot of noise to filter out where they can also continue the trend, and these just don't give you any valid signals. These will try and point you in the direction of another direction, excuse me, when the market is actually continuing either to the upside or the downside. So let's get rid of this. Let's make this chart a little clearer. So once again, we see that indicators are very lagging. Okay, so now when they line up together, they do help to give you an idea of buy and sell signals. However, they are always in the lag. Now, I always say that the best indicator of the market is the market itself. Now, at the beginning of this webinar, I told you about a book, High Probable Japanese Candlestick Patterns, which, by the way, if you want to access our products, courses, and services here on forex-trading-unlocked.com, you come down on this part of the tab. It says High Probable Japanese Candlestick Patterns. That will teach you, give you access to a little bit of the book. You can see how the writing style is, and you can get more information about it. And in that book, we highlight how to trade these signals. So wait, let's make this a little clearer here. Let's make a different arrow. Okay, so this little red bar right here, just below the high. Okay, the previous day it made a high. Then we have this sell-off. This is called a bearish, and bearish always means lower, engulfing line sell signal. Oops, not engulfing line. Okay, so what is a bearish engulfing line sell signal? It's a high probable Japanese candlestick patterns, and it happens to be one of the most popular and highest value as far as being a good signal. It's probably one of the, I would say, besides being in the top 10, it's probably more in the top 3 as well. They are very significant. They work in all markets. Now, time frames is a big thing you need to be concerned about. You learn which time frames to use these in the book, High Probable Japanese Candlestick Patterns. And just because they occur doesn't mean that they are a signal. You have to know when to exercise these. So let's give you a little clue and a heads up on how to do so. So right here we had this sell signal, and as you can see from once this day was over, and what this is a down day. See how this is red? When we're trending up, these are green bars. The down days are the red bars. So bearish engulfing line is a down day. Okay, so bearish down, bullish up. It would be the opposite if it was a bullish engulfing line. So what is a bearish engulfing line? Well, if you take a look, it didn't make a higher move high on the day, but this body, the colored part of the body, when you see it red like this, that means this is the opening, this area here. This is where it closed. Conversely, on an up day where it's green, you can see that that's where it opened. The market traded a little lower. That's the little candle wick there. And then it settled up here, and the candle wick there shows you the high of the day, but that's where it closed. So on this particular day, the market had opened, had traded a little higher after it had opened, then it traded lower all day long, made a low of the day, and then settled just above it. So that would be your bearish engulfing line, because this body, this candle body, not the wicks, the body, it encompassed the whole trading range of the day before. So if it encompasses the whole range plus a little bit more, then that sets it up to become what is called the bearish engulfing line. Okay, so now this is a great sell signal that we like to use in all market time frames. Now the question is, how far does it go down? So this is a daily chart, so you would have a daily projection for a downside target. Now for this is a beginning Forex traders lesson. We are not going to get into the actuating of these signals. That's a whole lesson in itself. Like I said, check out the book, High Probable Japanese Candlestick Patterns. You can access it through the navigation bar on our website or from Amazon.com. And that gives you full instructions on how to trade that particular signal as well as other signals. So, but this is something that I want you to know as a basic Forex trader before you start pulling the trigger is you need to know these kinds of analysis. So remember we were talking about indicators. So why am I using this one? Well, this is an actual signal. So now let's go back to our indicators. All right, so let's pull up the stochastic. And remember, when these lines cross, that's when you're looking for a buy or a sell signal. Now, interestingly enough, and we'll put a vertical line here. So this day, that's the wrong color to use, though. Let's use not green. Okay. So as you can see, we have the bearish engulfing line, this red day. This line here shows you where this indicator is. Now, when we had this crossover here, there was no sell signal. We had the indicator indicating that it was overbought and ready to sell off, but the trend kept on going. Once again, we finally had a crossover. This is a big down day. It's not a bearish engulfing line. This is a sell pattern here, but it's a very minor sell signal. It did line up with this cross, but still not a very valid one. Now, when we use something like a bearish engulfing line, oops, we can spell this correctly. Sorry about that, folks. The bearish engulfing line, we know that at that point, if the market has obviously been railing into a bearish engulfing line. A bearish engulfing line is when you have a reversal to the downside. It is a very valid signal. Does it fail? All signals fail every once in a while. This one, on an average, though, is very successful, at least in the short run, to even the intermediate term where it does hit its initial target signals, downside targets in this case. So, since we have a signal and we have an indicator that was already showing us that it was overbought, and then it crosses, that makes us very, very sure of ourselves that a short-term corrective trade is developing or has developed. Okay, so now you would look to see the market travel down to an expected target area. Finding targets and things like that off of trading signals is a whole nother webinar in itself, but right now we are showing you how in the beginning as a Forex trader you need to encompass these things and also understand how they work and are interrelated. There are lots of instructors out there that will say, hey, set the stochastics to this number and filter it. We didn't even filter the variables of how these lines work. You can skew these where they don't have as many crossovers, where you filter it, you optimize it basically, and you can optimize any indicator all you want, which is good because certain markets you have to fine-tune them because they behave differently than other markets. Every market has its own nuances. So just as we can see here from the stochastics where they cross over, and then with this signal, boom, this is the one that is valid. So because this one here, we didn't have a signal, we just had an indicator giving us a reason. Now let's also pull up something else. We'll go back to our relative strength index. This one here was in the middle, and this one wasn't really giving us any reason. So this is a thing where, see, if we were just relying on the two indicators, we would have one that gives us a sell, one that's in the medium chop zone that really would say, do we take this trade or do we not take this trade? This would give us no information. It would be a mixed bag of goods. But with this indicator lining up with this sell signal, that gives us a confirmation that, yes, we are looking for a short-term turn in the market for a corrective move that would target, certain levels. Now, no matter what, this doesn't mean that we are looking for the market to become a big bear and all of a sudden it's doom and gloom and the market has turned. Remember, we're not trying to pick a top, and we never want to try and pick a top or a bottom anyhow. This would be just a time where the market had been rallying. It gives you a setup for a very good, low risk, high probability sell trade. Conversely, this could be done also to the as a buy trade as well, for a bullish engulfing line. So this is a very simple way of incorporating your trend dynamics, which no matter what is number one. So your indicator here, this is one of the last things that you look for. These things you can definitely use, and I do highly suggest that as a beginner you use them. But remember, there's a lot of noise that can be happening. And another thing is, be careful of smaller time frames. If you think that this is hard to read and hard to digest and figure out, this is on a daily basis. The daily, the weekly, the monthly, they're not as hard to read as if you start getting into, say, the shorter time frames like an hourly or a half-hour chart or a 15-minute chart. There's a lot to filter out. There's a lot of unnecessary noise, and I highly suggest as a Forex trading beginner that you stay away from such types of time frames. Trade the longer term. It's like this. Think of it as if you know people who are big gamblers, they have all these parlays and this and this and that, and they're like, oh, if I would have just done this, or if this just hit, I would have gotten paid. Well, those are all gamblers. They're all would have, could have, shouldas. They're good, rich quickers, looking for the quick kill. That does not happen. Okay, over time, you're going to get buried doing that. However, if you wait for the market to come to you, wait for very good, valid trade setups, definitely use very good discipline in your risk management, then you put the odds in your favor. And then when you incorporate having very high probable sell signals and buy signals on top of that with good money management and trade selection, and then you start to open the doors to where you can become a successful Forex trader, or any trader of any market for that matter. So that is something that you want to always have in your forefront, because trading is not gambling. So let's get rid of these two things here. So once again, trend dynamics. Always know whether the market is going up or whether the market is going down. When you have higher move highs and higher move lows, that's when you're looking for, in this case, you'll be looking for a sell signal as you make higher move highs, which we did here, and it became a bearish engulfing line. Now, for instance, as the market was going here, there were other times where it started to sell off and came back here. Why wouldn't we sell here? We didn't have a signal, okay? Then the market bounced here. Why didn't we buy? Why wouldn't we buy here? Well, at this point, we have no signal. But here, as the market was continuing to trend higher, and now all of a sudden we have a sell-off, a counter-trend trade, because of the way it shaped up and the way it formed up, that gave us our entry into the market. And that's what you want. You want clarity. You don't want to be subjective as a beginning Forex trader. So this lesson, I hope, has really sunk in. This is a very basic lesson, and the reason that we are focusing on trend dynamics is, without trend dynamics, you can go back up here, all these numbers and economic numbers that you need to be aware of, especially the big ones that come out, they're not going to mean anything. You're not going to understand how to trade those numbers, what the kind of influence they may have during these areas here before you get to a signal. Another thing is, for instance, when you have a signal like this that lines up where, for instance, you have big news, which we did. We had some big oil numbers 3 days ago on Wednesday, and some other things that came into fruition, which maybe that's what caused that sell signal. So the news events you need to be aware of, and especially when you have these signals that are going with counter trend information, those things line up with those other indicators like we showed you, and then shabam, you have a valid sell signal. Now, as you can see, this one came down to our initial target, or just shy of it. If you read the book High Probable Japanese Candlestick Patterns, you would know what that is. And then here you can see how it bounced today. Originally this was much lower on the day. Now it's stronger. It doesn't mean that it's not going to fall apart on Sunday night when the markets open up, because right now it's a Friday and the trade is winding down. It's a lot of the reasons why we're doing this webinar now, because it's a little bit quieter of a trade. So the key thing, once again, is to remember your trend dynamics here. For beginners, if you don't do that first, guess what? You're going to be on the wrong side. So for instance, like one of the reasons I stress trend dynamics is that you want to know if your trade is in with the trend or if it's a counter trend trade. In this case, it's a counter trend trade. So in this case, when you are in a counter trend trade, your expectations for targets also is much more restrictive. In this case, we would be looking for shorter term targets versus longer term targets. Now there's all kinds of ways to find targets, and I'm going to give you one of the best and quickest ways right now. So number one, we have the 50% rule. This has been valid for traders for a very, very long time. Okay, now what is the 50% rule? So you take, I'm going to have to throw a horizontal line here. So this point right here is the 50% line. So what am I babbling about? So see this low here? This was a major low here that set this trend, okay? Here's a good short-term low also. That there was a big correction here. The most noticeable correction in the past month and a half was this one here to this down into this low right here. Okay, so from here, as we continued to rally, we made higher move highs, higher move lows. Okay, so there is our trend. Any sell trade, once again, is a counter trend trade. So when you're looking for a counter trend trade, you got to figure that it's not going to go that far because eventually the upward bullish momentum is going to pull the market back up. So 50%, if you take this low, the value here, which is $1.1985, and you go to this high from 4 sessions ago, right up here, this last high, that's at $1.2266. That gives you $1.2125 area as your 50% mark. Markets tend to, when they sell off and correct, a lot of times they gravitate towards the 50% area. This did not touch it, but let's see what the low is. The low is $1.2132, and so it's only 7 pips off. When it comes to markets, you're not always going to hit your target to the point. Sometimes it's going to go through it, sometimes it's going to fall just shy of it. Now in this case, this is big information, because the fact that it fell just shy of it means that the 50% is good support. We're looking for a higher move low. I mean, we're not going to say right now, we are looking for the pattern to continue, which is a higher move high, higher move low, higher move high, higher move low. We're coming off a higher move high. We're expecting the sell-off because of the sell signal, but we're also looking for it to come and make a potential higher move low. Okay, so that's the big question, if you will. Is this a higher move low that was established today, and then we're going to go make a run for higher move highs? Is the sell signal over, or is the market going to digest a little bit, settle where it is today, and then on the next trading session come back down and test support? Well, anything can happen. We've already seen that most of the market action from our sell signal is hit. Because it's a counter trend trade, we're expecting it to only go so far. So you wouldn't expect it to come all the way down to 120 or 119.5, all the way down in this area. Could it? Absolutely. This could be the top of a new trend that becomes bearish over the next few weeks. But we're only into it for a couple of days. And since it's a counter trend trade, you want to take the money and run as soon as you can. So this would be a case where, for instance, today, where it had fallen just shy of a couple ticks or pips, excuse me, for Forex away from the target, you may have wanted to exit the trade had you been short on that signal. Also, if you're being disciplined, once it hits very close to the sell that your target, usually you want to lower your protective stops. So in this case, for instance, and this is something you always want to take into account, since you sold the market, and in this case, the entry price would have been the close of this day, which was $1.2192. Had you sold $1.2192, your stop would have been up, which was the high of this day here. So that's $1.2266. So initially, you would have sold that area right here, $1.2123-ish area. You'd have the $1.2266 as your stop. Now, once you came down to this area, you would want to lower it. Now, these are things that starts to get into the actual mechanics of trading. This is a video for beginners where when you are a beginner, you should not be trading whatsoever. You should not even have an account, okay? Because you can get into paper trading. Paper trading is a crutch if you do not follow it the same way you would do when it's reality. You don't. If you're paper trading, usually you have an account size that's much bigger than what you would be trading normally. So it is a false sense of security in a lot of ways, and also you wouldn't behave the way you do when you're when the markets are real. So that's something you want to. As we give you other beginner Forex videos here that we will get into how to manage those things. But right now, when you're a beginner starting out, these are the fundamentals that you need to watch and know and understand. And when you have a grasp of them and have seen the markets move for a while and see how these things manifest, that's when you start to get into the paper trading and then eventually get into real trading. Because there's a lot of things that you have to master before you get into trading. One is money management. It is the #1 rule. But before you learn money management, you need to know what you're managing and what kind of risks are entailed. And you don't learn that until you study the markets and learn the dynamics first. And then the money management will start to become really clear as to not just what kind of profitability potential you have, because there is always a profit potential, but also what's your risk potential? What is your potential risk of loss? What is your potential risk of failure? You know, for instance, one of the biggest problems I encounter with beginning and experienced traders is their lack of discipline when it comes to money management. If you treat trading like gambling, it is gambling. If you treat trading like a business, you will have the same type of results that you have in a business, where there are ups and downs, but you have the potential to be successful and to be profitable. If you treat trading like gambling, I will promise you that in the long run, you will lose. You may have some great swings to the upside and bring in all kinds of money, but eventually with that kind of behavior, you will lose money, and you will eventually end up failing at the trading business. So, since we have shown you these different basic trend dynamic steps, for all of you that are watching the video, leave questions. We will answer them in the comment sections of the YouTube video. Remember to subscribe to our YouTube channel also. That way you are that way you know when we have future videos that will be released. So this one was about trend dynamics and the introduction of the basic things that you need to be aware of for trading Forex. So remember, the first thing is paying attention to the trend. Then as far as, remember how we lined up the indicators, you want to have more than one that helps to give you an idea of when the trend dynamics start to fluctuate off of new highs and new lows, or new lows and new highs, depending if you're a bull or a bear. You know, those are very important. And then what's even more important is to have a valid trigger point. So you need to have your trend dynamics, you have to have your plan, but you need to have a valid entry and entry signal for whether it is a bearish signal or a bullish signal to help you incorporate into your trading system. Okay, so you need to have a system that you follow, and you follow it always like a robot. Never be subjective, because once you become subjective, then you don't have a system. What you have is you gambling in the marketplace. Okay, so subjectivity, throw that out the window. Trade like a robot. First, find your trend, define your trend, see how it's moving, and then you want to look for a signal that either, in this case, is a counter trend signal, or you look for where this market is overall a bull, making higher move highs and higher move lows. You wait for a sell-off, and then if sometimes there's a signal, like here, this was a low-risk buy signal. Now this is a counter trend because of the sell in the short run, but in the longer run, a buy signal here is with the trend. So this one, as you can see here, you had a nice explosive move to the upside. Then even though it corrected, it stayed above this area here and is now much higher overall. That's where, when you're trading the action of the trend, it's very big. So then when you have, so let's say instead of having a bearish engulfing line sell signal here, you had the market has been correcting lower, like in this, let's say if this was here a bullish engulfing line, which, by the way, it is. Was wondering if anyone here who's watching the video would be like, hey, you know, you said that's also a signal. See this little buy right there, this little green bar? Here we had the market break down for 1, 2, 3, 4, 5 sessions, and then boom, here's your bullish engulfing line. Look at this, made a higher move high. See what I'm saying? So we started out with the bearish engulfing line, trying to show you once again how these signals could line up, you know, or how a signal will tell you when a turn in the market or which way to direction you want to trade. But see, it goes also here. So since we've seen who is sleeping and who's not, let's go back to our indicators and see how these line up. Now this is all live, folks. I'm not making this up. The markets are trading right now. Whoops, that's the wrong one. We want the stochastic without the RSI. The stochastic, there we go. Okay, so see how we have the bullish engulfing line, buy signal right there. Look at where it lines up right there with this cross. So once again, when you have these crossings, this is how you knew which one to trade. We had our high probable Japanese candlestick pattern that came in and told us to do so. Is starting to become clear to you folks? I would hope so. I think that now you can see where you use your indicators here, but when you incorporate them with, oops, there we go. When you incorporate this buy signal here or the sell signal here, and they line up with these indicators, then all of a sudden you got your trade. So this would have been an indication here, or this is what would have happened if you follow our methodology here. You have the patience, you see the trend here is developing, it's a bull, you're not in the market right here. Here we had to start, we began a correction here. You know that this is a counter trend wave right here. So right here, because you've been making higher move highs and higher move lows, you're looking for off this higher move high for us to find support. Well, the market did. Here was your buy signal. Just as here you had the market, it was oversold for so long, but look at, you would have gotten killed trying to sell all during this period right here. You wouldn't have made any money. You would have gotten chopped up. But once the market had turned, and this was a short-term sell signal, very weak one, came into this here, and then here, the indicator, it turns. Now it's in this middle noise part. When it's in this thing, you never know whether these are valid buy or sell signals here. Usually you have to trade the ones that are above here or below here. But here we had this bullish engulfing line. And I'll write that into a little thing here. Bullish engulfing line. Oops. Buy signal. All right, so this is all live, folks. This webinar is not being created and laid out with pictures that just suit our needs. We are doing this, as always, on the cuff for you to show you how these things work. So you have your bullish engulfing lines, buy signal that popped in. Now, what does this mean? Remember, we're in a bullish trend, so this is a bullish trade. So you're trading the action, and the action is the trend. That's where you get your biggest bang for your buck, your biggest pop. You would have hit your initial targets. On this one, you could have taken profits, or in this case, since it's with the trend, you may hold on to it for an even longer time, where now you would have hit your initial targets and now the market's even higher. So giving you all kinds of opportunity to see how these things work. I'll make this chart a little bit bigger as we wind down this one for you. So once again, see how we had the bullish engulfing line that went with the trend. We had the stochastic crossover, and here we made a higher move high, then a higher move low, higher move highs into the past recent sessions. Now we're looking for a higher move low because we're not trying to call a turn in the market, even though we have a bearish engulfing line sell signal. We're expecting this just to be a correction, like this was down into this area here. And then who knows? Maybe it fell just short of this target. Maybe it's done. I would say probably give it a little bit more time over the next couple sessions, see if it gets through this target here, and then look for a chance to buy. once again, or who knows, maybe the market is turning overall. There's all kinds of fundamental geopolitical things to work into the marketplace as well. That gets a little bit more advanced. That's for advanced Forex traders to focus on. Keep it simple. This is a video for beginning Forex traders. We want to thank you very much for listening to this video and watching it. Watch it again. These are very simple key points that if you use them, they can be a very good foundation for the basis of your trading moving forward. To not incorporate these simple, very basic fundamentals, you are setting yourself up for less chances of profitability and success in the future. Based off of 30 plus years experience in the business, just like in any sport, a fundamental is key. Think about it like this: when teams are not performing well, I don't care whether you're a football player, a baseball player, a basketball player, a hockey player, what do the coaches do when you're losing games? They get you back to practicing fundamentals. Why? It's not to punish you. It's because fundamentals are the base for winning, for the base for foundation of all structures built have to be solid. Without the fundamentals, the foundation, you cannot last. So these are big things. I know you're saying, why doesn't he give us more information on this or that? There are videos coming up, and if you look at our other videos on our YouTube channel, you can see other lessons. But for a beginning Forex trader, I cannot stress it enough. If you do not follow trend dynamics initially and focus on that, and then incorporating whatever indicator you want, you can do that. But then you really want to have something even more. You got to have a valid reason for entry, and whether it is bullish or bearish. High probable Japanese candlestick patterns, I rely on them. They work. I've been using them for decades. But there's a proper way to apply them. Read the book High Probable Japanese Candlestick Patterns. That will help you out. Remember, you can access that from our navigation bar. You go to the products, courses, and services bar here. You go to High Probable Japanese Candlestick Patterns, and that will show you what's going on. So in fact, what I'll do is I'll pull up another one because I don't want to lose the chart. You hit the High Probable Japanese Candlestick Patterns on our website, forex-trading-unlock.com. There's a little video here about high probable Japanese candlestick patterns that you can watch on our website here. And then here it has a cover of the book. You can either buy it, you can share it, and you can preview it. If you preview it, as you can see here, chapter 1, you can go through it and start to read it and get an idea of what the book is all about. And after you've read the book, and especially certain chapters like the money management, that's when you can get into trading. Until you read our chapter on money management in that book, I highly suggest you do not start trading. And also, we show you how to incorporate these bearish and bullish sell signals and buy signals into any trading plan for whether you are a beginner or advanced trader. And if you are a beginner, all the better. We can show you ways on how to start very modestly with having rational expectations, rational goals, and that you can meet and get you started in not just Forex trading, but in getting you going in the proper way overall, period. Okay, so that is very, very big. Now, just also real quick, I want to show you from our tools navigation bar, we have the partners page. From our partners page, there's always questions about, who do we recommend? As far as brokers here, we have Forex.com. We have access to you here. Then we also have Multi-Charts, which is one of our trading platform providers. And then we also have other partners also that you can access from our website depending on the page. So definitely check out those things. We want to say thank you very much for you taking your time. And before we end the video, we want to show you this, which is really important. If you want to follow up on other videos and what's going on, Forex Trading Unlocked on YouTube, this is our channel. From our channel, we always have, just like on our homepage, our current weekly analysis video up that you can access right away. You can see the most current uploads, obviously, that are here. We did one for today. Then we have our created playlist here. We have today's lessons. We have trading lessons. We have repeat videos for the week and for the day. Daily analysis. We have other TFNN.com. These are videos from our interviews on there. We have featured channels. So eOption, Nadex, and TFNN.com. We've done videos for all of these and webinars for all of these. Every Wednesday, you can find us on TFNN.com at 8:40 past the hour Eastern Time. Once a month, around once a month, we do webinars for eoption.com. We also do webinars for the Nadex as well. You can see those past ones on our playlist here. You can see from tfnn.com, eoption.com, Nadex and stuff. This is all Forex Trading Unlocked. We work with major brokers, all very compliant, regulated institutions. We do not deal with any of the fly-by-night, get-rich-quicker, and the shadier companies that are involved in the Forex space. Please be careful with who you do deal with. Deal with professionals. You can see that on our website. We have disclaimers all over the place. No matter what page you're on, we have our disclaimers. NinjaTrader you can download from almost every page on our website as well. Check them out. So and definitely subscribe to our YouTube channel so you know when our webinars are coming out in the future. So thank you very much for your time. Once again, I want to say thank you from all of us at Forex Trading Unlocked. High probable Japanese candlestick patterns available on Amazon.com in paperback and Kindle versions. Check it out and read it. If you're an Amazon Prime reader or member, you can read it for free. So definitely check that out. Thank you very much. I'm Teddy Keckstedt from Forex-Trading-Unlocked.com. You have a wonderful day, and if you didn't catch all this video, watch it again and from the beginning, and after that, watch it again and again and again until you get the trend dynamics and those very basic skills for beginning Forex traders. And get ready for our next webinar because we will have another one coming.
This is your home. This is your family room / gym. The guest bedroom / music studio. The daybed / dog bed. The living room / yoga shanty / regional office.
How did you guys do it?
/ classroom. And this is the basement / panic room. Maybe what your family needs is a vacation home / vacation home. Find yours on the Verbo app.
Imagine this scenario. You buy a little-known cryptocurrency at $2.82 from a major exchange. The coin surges to $26.50 per coin, handing you a 9-fold gain. Sounds pretty good, right? But what if this happened instead? You buy the same cryptocurrency, but this time you buy it using a perfectly legitimate backdoor method for just 48 cents before the coin is listed on the major exchange. Instead of making only 9 times your money, you make 55 times your money. Is this really possible, or is it just a pipe dream? Well, if you know where to look, and you have some money you can afford to risk, I assure you this is very possible, and I'll show you how it's done. My name is Martin Weiss, and I'm the founder of Weiss Ratings, America's #1 independent rating agency, and the world's only financial rating agency that grades cryptocurrencies. So, in our work, we come across all sorts.
Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on January the 3rd for a Forex market analysis for the week ahead. Just want to show you our disclaimer to remind you that this webinar is for illustrative and educational purposes only. And if you haven't done so, please subscribe to our YouTube channel, Forex Trading Unlocked, or our Twitch channel, Forex Trading Unlocked. And also check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. All right, without further ado, let's get to our live action screen. We have the Forex-Trading-Unlocked.com website pulled up here. We have the workstation page already ready to go. All right, step one, let's check out the economic calendar and see what we have going on here. All right, so as far as today, we are through most of it. There's a couple of numbers still coming out around the globe, nothing significant. But as far as tomorrow, we start to launch some numbers, economic numbers that actually do mean something. So we have retail sales that will impact the euro. We have the CPI for Switzerland, and also we'll have a little bit of a tick, I'm sure, here or there that will make things move. We also have the unemployment numbers for Germany. That will be something that might stir up the euro a little bit. We have for England, we have consumer credit. So the pound may have a little reaction off of that. Canada, interesting enough, we have raw material prices. Canada, like Australia, is a commodity-driven country. This is a number that actually will most likely influence the Canadian dollar to some degree tomorrow. But then for the U.S. dollar, we have the ISM and manufacturing PMI number. That is also something I would definitely watch out for. It is likely to stir up the interest rate market a bit, and if it does do that, it is more than likely to stir up the currency market as well, because remember that interest rates are a function of currency pricing. So it's very likely that the dollar come 9 o'clock tomorrow will have a little bit of interest and possibly an increase in volume, I would think. So I'd be mindful of that. All right, then we have consumer confidence for the U.S. dollar yen also tomorrow. As far as Wednesday, we have normal oil numbers that will be coming out. That'll mean something. The ADP national employment number probably will be something to take a look at. I'd be mindful of that. I think that's probably going to come out as expected. I wouldn't think that they're going to have much of a difference on that one, but we'll see. Then we have, once again, the crude oil numbers that are coming out. That'll be an impact for the dollar. Let's see. Then we have Thursday. Consumer goods for Germany, that's something, and manufacturing number, that's something that will probably have a little spin on the euro-US dollar. They also have the CPI for Germany. That's another number that may move the CPI, or excuse me, the euro dollar a little bit. Then we have, let's see, composite PMI for the pound. Producer prices for the EU as a whole, that's something for sure. That's month on month and year on over year. It'll be interesting to see how that is. I would assume that those are going to be climbing at an escalated slope. CPI also for Germany, that's another number that's going to come out. It'll be big. Durable goods and factory orders for the U.S., that will be very big. I know that U.S. pork exports, sales net, what have you, doesn't seem to be something that you would want to be concerned about because unless you're a cattle trader, or excuse me, a meat trader, not a cattle trader, a pork belly trader. But we'll see. I think that this is something that's a key number for inflation and supply issues to watch, especially because it is food, and food is something that's a very big indicator right now for the markets moving forward. Initial jobless claims will be interesting. Durable goods will also be big. Factory orders, all these are economic numbers that are sure to stir up the bond market. I would expect that the 30-year Treasury bond and the 10-year note are going to see a lot of action. And there's something else you should be mindful of because of the fact that we know now that the Fed will be raising rates most likely 2 to 3 times over the course of the next 12 months. The question is, will it be sooner than later? I believe that it probably will be sooner than later. Probably not yet in this first January, the first meeting of the year coming up. I think it'll probably be around the second or third meeting before they start to pop the rate. I could be totally wrong on that one. I'm not 100% on that, but I think that they still want to evaluate a lot of the numbers coming into the new year before they really pull the trigger. So, all right. Now we have CPI for the U.S. dollar yen also. And then we have Friday. Unemployment for the Swiss, not so much. Industrial production for Germany will be big for the euro. Retail sales for the Swiss, probably not so big. And normally it is a big number, but I don't think that's going to really shake up the Swiss too much. We have CPI for Germany, that will be big. And then we have retail sales and consumer confidence for the euro as a whole. Those will be big numbers for the euro. Then we have the employment number for Canada. We also have the employment number for the U.S. That one, believe it or not, this is something that is not going to stop anymore, but the employment number is always a big monthly economic number. I would be very mindful of what's going on with employment in the U.S. This is something that is definitely going to be huge for the currencies moving forward over the next 12 months. All right, step 2, let's conduct some market analysis here for you and see what's going on in the world, all right? All right, so euro-US dollar, as you can see, is having a big sell-off today. It's hanging on its lows as we speak right now. It's kind of a dead trade. It's not really ticking around very much. It's just hanging on its lows. We are starting the new year. Everyone's coming back online. However, with COVID protocols and things like that, I can't speak for what's going on in Europe as far as the business community and the trading community. But I do know that as far as in Chicago and in New York, there's a lot of people that are now working remotely from home because of the new COVID protocols and escalations of Omicron, blah, blah, blah. We're going through the next fear factor wave. These are things that are giving strength to the dollar right now and definitely leaning, having the foreign currencies leaning on support. All right, so what do we have going on here? Well, I'll tell you what we do have going on here right now. We do have a potential sell signal forming with today's trade with the euro. Okay, right here we have a bearish engulfing line that is forming right here on today's trade. Okay, we've taken out the whole body of Friday's trading. And if we were to settle where we're at right now, this would confirm a short-term sell signal. Even though this market has pretty much been going sideways, it has been railing off of this low here up until the high of Friday on the 31st for New Year's Eve, and now the market is coming down. Is this confirmed? No, it is not. So don't try and get in front of a trade right now. If you're not already short in this trade, I would wait until the close of today before you jump on such an action. Like I said, if we settle around where we're at right here, or if we settle below the opening, let's see, the opening on Friday was at $1.1323. So as long as we settle at that price or lower today, that will confirm a bearish engulfing line sell signal. Okay, now does that mean that we're going to have an exacerbated sell-off? I wouldn't say necessarily. Right now the momentum is really nowhere in this currency, as you can see, for the whole month of December. Let's see, it had a range of, let's see, the high was around 113.82 and the low was 112.21. So you're talking about $1.60 as far as the range for the euro for the whole month of December. So it was a range trader's delight, trend traders disaster for December. So now are we going to break out to the downside for this trend? Well, overall, as you can see, this market has been trending lower. If we go all the way to this furthest high out, as you can see, there we go. Okay. All right, so here's the downward sloping trend line, keeping the trend intact. As you can see, before we hit this downward sloping resistance line, we have this sell signal that is forming today. So by attrition, we would be coming out and breaking out of this slope. However, with the way it's selling off today, I would expect it probably have some follow-through going into Tuesday and to Wednesday, maybe even into unemployment on Friday. Remember, we have a bunch of economic numbers that are coming out for the euro this week, predominantly starting with, well, tomorrow there's a bunch, and then we have Thursday and Friday for the most part. So I would think that if this trend, the signal is sparking the beginning of a new trend, you will probably see that the market, probably, most likely, within the next few sessions, we'll be testing the lower boundary of this range that we were trading in for the month of December. So I would key off of this $12.21 area and be very mindful that any failure from here has us pressing the flirting with new move lows, and I would expect that we will take out the low that was set here in November. Now, are we going to sell off radically? Right now, we have to see how the next couple days shape up and then how the numbers shape up. Remember that Europe is going into lockdowns in a severe way. They are really, really clamping down. Italy has imposed really harsh restrictions. France has as well. You have all kinds of nightclubs and restaurants that are now shuttered for the next 2 to upwards of 4 weeks. This is something that we are going through it again. So as far as it's not about what you think about the narrative, it's just a reality of what's going on. And this is starting to impact the U.S. too. I can't speak for the whole country. It's definitely divided. But in New York, and I'm in Chicago, and now they have new measures where it's if you're not part of the short-term experiment and the jab, you are not allowed to go and do anything anymore. You can't go out to dinner. You can't go to public places. You can't go to all kinds of things. So as this does happen, you have to realize that it's going to cause a clampdown on the economy in the United States as well. So that's why I don't think you're going to have an exacerbated sell-off with the euro, because the dollar is going to be taking some pressure off from those things that are happening. But right now, currently, as you can see, we are just off the lows. Euro US dollar is bearish. So let's go to the British pound US dollar. Okay, so the British pound US dollar here is also falling on support, not quite as heavily as the euro is. The pound, because of oil and because of some other things, has a little bit more to gain. Now, even though the overall trend for the pound has been negative, currently over the month of December, you can see that the British pound started to be a little bit of a range trade in the beginning, first half of December, but then boom, it sparked a low here on the 20th and it started this at least right now, an upside correction. Today we are selling off. Do we have a sell signal here? We do not have any sell signal here. So I would be very cautious right now. The short-term trend is bullish, with oil looking like it wants to break out to the upside again. It's very likely that the British pound will have a little support versus the dollar and other currencies. I would be very cautious being a bear right now with the British pound US dollar. Obviously this last low here from the 20th is a key support level. Any failure from 131.74 or trading around in this range will have this market flirting with new trend move lows. So the question is this just a correction to the upside, or is this the beginning of a turn in the market? Really hard to say with the lockdowns going on and being imposed in the UK. This is also disrupting the pound. So we'll see how either ahead of the curve or behind the curve the countries in Europe are. Now remember, the pound is no longer part of the EU, even though the pound has always existed, even through the when England was part of the EU. Remember, Brexit has occurred. We are in post-Brexit now. We don't even talk about post-Brexit anymore. It's been so long. But that's why there's probably strength in the pound US dollar versus the overall weakness that we are seeing in the euro US dollar. So be very mindful of this. We'll take a look at, in fact, here, look at the British pound AUD. This is a trade you might want to be watching for. See how explosive this is? This is because Australian dollar is down today, so is the pound today versus the dollar. However, even though Australia is a totally commodity-driven country, the lockdown measures around the world and also the ones that they've had there are so strict that it is really putting pressure there. So this is a trend. Look at this. There is pound strength versus the Australian dollar. I would be mindful of this trade here for those of you that trade either the pound or the Aussie crosses, that this is a really hot trade. Most likely you're going to see a challenge of these highs from the beginning of December sometime within the next week or so. So there's a little pop you might want to look at. Now for the US dollar Swiss, as we wrap up our European analysis. Okay, look at this, like a balloon underwater. Here we also have a potential buy signal. Like if this market settles for sure where it's at today, we have a confirmed bullish engulfing line. So like we had the bearish engulfing line, which is in the euro. We have the bullish engulfing line forming in the US dollar Swiss. This is very key. When you start to see high probable Japanese candlestick patterns evolve or form at the same time in major markets, there's typically a very big turn coming on with the dollar. So if we look at the Dixie, here's the dollar index. Friday was tapping its lows. Today, the dollar index is coming back on and challenging resistance. So are we going to have a buy signal in the dollar index? We're going to have to wait and see how that is. But let's go back to the US dollar Swiss. So as the dollar turns, and right now it seems like we are bottoming in the dollar, looking for some strength. We have confirmation with the euro and the Swiss right now on a daily basis, intraday, that strength wants to turn this market around. And now, does that mean we're going to get a monster rally? Well, not really. If you look at, here's the base on this whole chart going back to August. We basically be trading from 90.88, so basically just under 91 to 93.74. So you're looking at a $2 range that this market has been swinging around. Now, unlike the euro that has been totally sideways through December, this one was whippy. I mean, it was sideways, and then it's been trending lower for the last week and a half, just like the pound had been trending lower as well. So I would think that most likely you're going to see follow through over the next few sessions. We're coming into the middle part of this range. You can see what this market was doing in December. It could get very, very choppy. So I would say if you're not long right now, I would wait for confirmation of this buy signal today. I mean, anything can happen. It's only 11 o'clock Central Standard Time. We got a full trading day to go get through. So we'll see whether strength prevails and whether we do have a valid signal come the close of today's trading. Just to let you know, for compliance sake, and we are currently long the US dollar Swiss. We're also long the US dollar yen, which is something that we're going to get into right now. So, US dollar JPY, let's look over what's going on in the Asian markets. As you can see, the US dollar yen trade is pushing resistance slightly, but not as radically as it is in, say, the Swiss or the pound, as we've seen how it's trending today. However, this is the little bull it could. It is falling, it is pressuring resistance and looking to try and break out of this high from November at around 115.55. We've had 116 as a price target in the U.S. dollar yen for quite some time. It's been bobbling here, and but it based, and now it's been trending higher since the beginning of December. You can see it's been inching higher, crawling higher. No really big moves except for this one day here and this one day here. Also back here when it first based. But 3 out of 20-some trading days doesn't really make a trend now, does it? However, each day you can see it's positive. Very little red on this slope. So the question is, will we have a breakout to the upside today? Probably not. I would say that the trading for the U.S. dollar yen is very, very, very tight. Just to give you a little clue as to what to be mindful of for the U.S. dollar yen, watch the energy sector. So here we're pulling up the CME site just to show you real quick. You can always look at what's going on with interest rates and all kinds of other things. Oil today, as you can see, is up about a little over half of a buck. So it's just over just under $76 a barrel. If you see crude continue to trend higher over the next couple sessions, this will be one of the driving forces that in the short run is going to help certain commodity-driven currencies. So the pound, because British Petroleum and blah, 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 and then a bunch of other interests for the UK, they're very strong as far as oil producers, even though they don't produce it so much around the UK, but they own the interests around the world. So an uptick in the oil futures most likely will help to drive the British pound US dollar trade higher. Simultaneously, though, it will put pressure on the euro US dollar as well as a couple other non-commodity driven countries. The Swiss, you probably will see this will help follow through with the US dollars over the Swiss, meaning that the Swiss will be weak. Australian dollar, for the most part, will be probably stronger than some other currencies, except for versus the pound. It has to do because of the degree of lockdown measures. So we'll take a look at that later. Something you also might use is when you check out the CME market tab here, go to interest rates. This will show you the 30-year, the 10-year, and the other ones. As you can see, you have the 2-year, 5-year, 10-year, and 30-year. This is significant. The U.S. dollar is impacted by the pricing of interest rates. Okay, so today the U.S. Treasury bond futures are down 2 full handles. That means 2 full dollars plus 6 more ticks. So this would be each dollar in the Treasury bond futures is 32 ticks. To a Forex trader, that would be a pip. A pip and a tick are the same thing. Okay, so each dollar, this is down $2, is 32 ticks. So that's 64 ticks the market's down plus another 6. Okay, so that's down 70 ticks on the U.S. Treasury bond futures just to start off the week. This is huge. As interest rates go down in price, that means interest rates go up. Okay, so there's an inverse relationship. So as interest rates are going up, this is why you're finding strength in the dollar as well, okay? So this is going to help to fuel this trade. So we'll see how the markets close today. If the dollar index sets a buy signal, which it may do because of the pound and what's going on with the Swiss, then it's very likely that you're going to see a lift in the dollar for the next 3 to 5 trading days, or at least going into Friday's unemployment number and other economic numbers. So does it mean we're going to be an overall bull for the rest of the month? I'm absolutely not even going to bother trying to lean on that one. But what I am going to tell you is that it's very likely that we will continue to challenge resistance for when it comes to the U.S. dollar versus other crosses. So be mindful of this. Like, once again, we are long the U.S. dollar yen. 116 is our first price target, and then 122 is our longer term target that we're looking for. We're looking for oil to get above $100. We're looking for oil to hit 150 sometime in the next year. Inflation ain't going anywhere, folks. I mean, it's kind of funny. I don't know what math you may use or not use, but just a couple weeks ago, the Fed says, we're only running at 7% inflation year over year. Well, I don't know where they go shopping or what they're dealing with in the world, but almost everything that you can buy out there has gone up at least 50% over the past 12 months. Actually, over the past 12 months, 10 to 12 months, let alone upwards of 100% or more. So now here's the thing is, if this continues, it's going to really shake up the markets in a big way. So why do we look at these interest rates and also oil commodity? Because this is helping to drive the pricing for currencies. Okay, it's a very big deal. It also means that the buying power for the U.S. as the dollar gains in strength, our exports become more expensive, but our imports become cheaper. Well, that's great in certain regards, except for it's not good for our businesses. And as far as imports, well, right now we need to be more concerned about our economy than helping to fuel other ones around the globe, especially with the supply chain issues that we're incurring. So, all right, so U.S. dollar yen is trending higher. It's a bull. I would be mindful. Only a failure from this last swing low here of around 113.13 would have us on edge, flirting with new move lows back down to around this 112 area. I don't see that happening. What would make a move like this occur, or most likely influence a move like this to happen, to fall on support? So if you are bearish here, here's what you're most likely going to need. You're going to need a big rally in the interest rates, meaning a turn from where they're going and trending right now. I don't see that happening, but who knows? There's a lot of economic numbers. Lots of things can happen, but the odds of it getting a big rally now in the interest rate markets would be only if the Fed was to shift their stance as far as raising interest rates and say that, well, they're definitely not cutting them, but if they were to say that raising interest rates are off the table for at least like 6 months, then perhaps you might see a shakeup like that. Not likely to occur. Okay, so oil, if there's a tremendous sell-off in oil, meaning that it gets below 65 dollars a barrel, then I think you would see the U.S. dollar yen trading back down towards it below this 112, probably back down to 111 towards this 110 area. Don't see that happening. Those are the factors that I think you're going to need in order for that kind of a trade to emerge. All right, let's look at the Australian dollar, U.S. dollar. Remember that we were talking about the Aussie versus the pound. Look at this, how it's selling off today. So there's more weakness in the Australian dollar, U.S. dollar, than there is in the pound. That's why you have that strength in the pound Australian dollar. Now, interestingly enough here, remember how we had different signals forming? This is why I think we're going to have to see what happens with the dollar index today, because it's most likely going to give us a buy signal once the close happens. We'll see. Here we have a bearish engulfing line sell signal forming. Now, unlike many of the other currencies, this has had a pretty defined uptrend for the past month of December, for most of the trading during that month. Now, is it bullish? Well, it had been in a bullish correction because overall the trend has been lower over the past couple months. Over the last 6 months, it's relatively sideways to lower, so very neutral to bearish, not bullish. This correction as of today, it looks like it is halted. Okay, meaning that this is a correction. So I'd be very mindful of what happens with this currency as far as strength and weakness. As we move into this new year and the new lockdowns are imposed, remember that Japan is completely opened up. There's no more lockdowns in Japan. So that does give strength to the U.S. dollar, or excuse me, the Japanese yen, but not when it comes to the Australian dollar, U.S. dollar. In fact, you know what? Let's take a look at the Australian dollar JPY cross. All right, see how this is selling off? Remember how I mentioned that they're not imposing lockdowns and COVID mandates anymore in Japan? This is a big trade right here. I would expect the Australian dollar, US dollar, Japanese dollar to continue to trend lower over the next few sessions, if not the next month, as this COVID thing does fuel up. Even if it doesn't fire up like it did a year ago or the prior year, I would say that you are most likely going to see this market under pressure. So we're looking at some potentially really good signals forming. We have to wait for the close. So what does that mean for Australian dollar, US dollar? Well, it means the Australian dollar, US dollar is going to continue to be weak. That's why we're looking for strength, being a bull for the pound Australian dollar, and now we're also looking for the Australian dollar yen to lay on support. Okay, so these are things that are forming today. We have not had confirmation. Please remember, do not try and get in front of a signal. Do not try and be Mesmo, the magician, and say that, oh, I can tell you when a signal is going to happen before it occurs. No, you can't. Anything can happen in the marketplace. So wait until they close, wait for confirmation, and then we jump on these signals. So we have a lot to look at over the course of this week as the trading unfolds over the next few days. All right, so now let's look at the New Zealand dollar, US dollar. This is acting a lot like the Aussie. Now here we have a bunch of currencies that are putting up both buy and sell signals, but it's where the dollar is gaining the strength, that is getting the positive note, and the other half of the currency cross is getting the weakness. So as we see this happen here, also New Zealand dollar, US dollar, this helps to go with our theory that we are potentially going to have a buy signal in the dollar index, whereas the dollar index has been hard to get a bead on a lot of currencies and the overall currency market over the past month, I think that we have divergence that is now causing these currencies to set a new trend. So am I bullish to US dollar overall? Absolutely not. Am I bearish? Absolutely not. But short run, it does look like we're starting off this year with a US dollar bull. So key off of some key numbers here. We'll take this high, and we're going to go off of today's high right here. Or we can actually move this up a little bit. Let's move it off of these. All right, so if we use this as our downward sloping resistance, holding this trend intact, we are falling short of this buffer here of downward sloping resistance. We have the sell signal, and should this manifest today, it is very likely that we will be challenging support. So I would be very mindful of this low area here of around 67 even. Any failure from here in the New Zealand dollar, US dollar, it was very bearish. Now, unlike the Australian dollar, I don't think you have the momentum in the New Zealand dollar to push support like you do there. I think you're going to have more of a basing, but yet leaning towards the 67 even. Could it get below it? It's very possible. Is it most likely going to sell off harshly through that level? It's a tough one. So I would be very cautious and be mindful of your risk. If you're a bear from New Zealand dollar, US dollar, we'll come up after today with that. Once we'll see if this sell signal does manifest, and then we'll have some price targets for you. But until the close of today, we don't want to get ahead of ourselves. Now, US dollar Canada, this is interesting. We actually are long this currency as well. It's having a breakout to the upside. This has a bullish engulfing line forming. Now, this is a tough read because as a whole, we would be pretty much thinking that this market has come to the end of its correction. Now, should we get a confirmation of a buy signal here today, I would be cautious. Is this top going to be challenged and taken out? It could be, but we're still viewing the US dollar Canada has been a wide range trade for months. Now the question is it really a bull or is it a bear? So if we look at support here from the last swing low down to here, well, we've taken out, as far as this upside correction, we've confirmed at least a neutral environment from this taking out of this upward sloping support line. Or we could be basing. Excuse me. If you look at